Hello students, we will start with the chapter Profit, Loss and Discount. The concepts in profit loss play a fundamental role in the realm of economics and accounting. This chapter will discuss the important aspects of profit and loss like cost price, selling price, marked price, list price, etc. Here we will see all these and many more sections providing you with the most complete and the most precise collection of these concepts. We will also practice some previous year questions so that we can check whether we are aligned with the latest examination trends. So let's start. In this video, we will cover the following topics, that is cost price, selling price, list price and dishonest dealers and faulty weights. Whereas in the next lecture, we are going to cover these three remaining topics, that is percentage gain or loss, discounts and equivalent discount. So let's begin. The first topic is cost price. Now the money paid by the shopkeeper to manufacturer or wholesaler to buy the goods is called the cost price, which is also written as what? CP, of the goods purchased by the shopkeeper. Now, if an article is purchased for some amount and these are to be added to the cost price, such expenses are called overhead expenses or overheads. Profit and loss are always calculated on the basis of the cost price unless otherwise mentioned. Questions on the cost price may also be asked by combining them with concepts like your marked price, which is also written as what? MP. To avoid loss due to bargaining by the customer and to get the profit over the cost price, a trader increases the cost price by a certain value. This increase in value over cost price is known as what? Markup, and the increased price that is going to be CP plus your markup. Markup. And this is the marked price or the printed price or what we call the list price of the goods. The formula can be used to obtain CP from the marked price and vice versa as well. Now, let's do a question to understand it. Find the cost price of an article which is sold for rupees 220 at a loss of what? 12%. Now, the SP here is nothing but SP is 220. Also, we have a loss of what? A loss of 12%. Let the CP be X. So, SP is 220, the loss is 12% and CP is nothing but X. Thus, we have what? We have 220, that is the selling price, equals to 88 upon 100 into X. Okay. Now, if I'm going to simplify this, I can see that X is nothing but X is equals to 250. Therefore, the cost price is nothing but 250. Thus, the correct option is going to be what? Option number D, that is 250 rupees. Let's move on to another question. This question states that if the cost price of an article is what? Rupee 300 and the percent markup is only 20%, then what is the marked price? Here I can say that MP, that is the marked price, that is equal to CP, that is cost price, and percentage markup. Percentage markup on what? On CP. So this can be equal to what? 300 plus 300 times 20%, that is 20 upon 100. And when I calculate it, my MP is going to be what? It's going to be 360. So the correct option is option number D, that is 360. Let's move on to another question. This question states that on selling a pen at 5% loss and a book at 15% gain, Karan gains rupees 7. If he sells the pen at 5% gain and the book at 10% gain, he gains rupees 30. So what is the cost price of the book in rupees? Let's suppose that the cost price of a pen is nothing but P and the cost price of book is nothing but small b. So as per the question, I can write that 0.15b minus 0.05 P is nothing but it is equal to 7. Or if I'm going to multiply 100 with this equation, then it will be 15 times B minus 5P equals to nothing but 700. Similarly, if I say that this is equation 1, I can also write another equation, that is 10b plus 5p is nothing but what? 1300. So this is going to be equation number 2. Now, if I'm going to add both these equations, I can write that there is 15b equals to 2000. Oh, I'm sorry, it's actually 25b equals to 2000 because 15 plus 10 is 25. So 25b equals to 2000. And when I'm going to solve this, I'll get the value of b as nothing but 80. So the correct option is what? 80. This is a very, very important question. As you can see that it is a previous year question and it came in CAT 2019. So let's move on to the next topic, and the next topic is a selling price. Now, price can be a sensitive issue. If price is too high, a dish may not sell, or customers may complain or not return to the business as they may feel they have not received the value for the money. Alternately, if a dish is underpriced and does not make a profit, the business will be damaged financially and will face problems in the future if it does not rectify that particular situation. Now, a method to ensure that a profit margin is achievable is to build a target percentage of gross profit into what? The selling price. Before understanding what this in particular is, let's read out the basic definition. So, the amount that the buyer has to pay to buy the product is nothing but what a selling price is. For example, suppose if the food cost for the dish is nothing but 3 euros, okay, and the gross profit target is said to be as 70%. Then the food cost as a percentage of the selling price can only represent what? 30%. Correct? It is important to note that the selling price is the total amount of money that will be received, so that this has to represent what? 100% for the purpose of this calculation. In basic terms, I can write that food costs plus your gross profit, this will be equal to what? Your selling price. Now, to calculate the selling price on this basis, the food cost have to be expressed as a percentage of the selling price using the following calculations. So, food cost divided by the food cost as a percentage of the selling price into 100. Like, if the food cost for a dish come to what? 4.5 euros. Suppose it's 4.5 euros and the gross profit target is nothing but 75%. The food cost as the percentage of target sale is what? 25%. Now, to calculate the selling price based on the information, I have to write that 4.50 upon 25 into 100, that is nothing but what? 18 euros. Now, by dividing 4.5 by 25, this brings the figure down to what? 1% of the selling price, that is nothing but 0.18 euros. Correct? Now, by multiplying it by 100, it brings the figure up by 100%. The selling price, that is 18 euros. As long as you have the food cost and the target gross profit percentage, this is sufficient information to calculate the selling price. Why? Because the formula is nothing but it is, I'm going to write it here, it's food cost divided by food cost as a percentage of selling price into 100. So this is what the formula is being used here. Let's move forward and solve a question. So the question states, an uneducated retailer marks all his goods at 50% above the cost price and thinking that he will still make 25% profit offers a discount of what? 25% on the marked price. What is his actual profit on the sales? So let the CP equals to 100. Then the marked price, that is MP, is going to be nothing but 150. And selling price is nothing but 75% of 150. Okay. So selling price is going to be nothing but it's going to be 112.5. And hence we can say that the gain percent. So the gain percent is going to be nothing but 12.50%. Hence the correct option is what? 12.5, that is option number C. Let's move forward and solve one more question. And as you can see, this is also a previous year question and it came in the year 2020. So the question states that a person spends 50,000 to purchase a desktop computer and a laptop computer. And he sold the desktop at 20% profit and the laptop at 10% loss. If overall he made a 2% profit, then the purchase price in rupees of the desktop is what? So if D is the price of the desktop and L is the price of the laptop, I can write that 0.2D minus 0.1L is nothing but 2% of 50,000. Correct? Now if I'm going to solve it, it's 0.2D actually minus 0.1L is nothing but 1000. That means D minus L is nothing but 10,000. And D plus L has to be what? 50,000. Okay. Now if I'm going to solve this, so if I'm going to solve these two, so I will get that D is nothing but 20,000. So the correct option is what? 20,000. Let's move on to another topic, that is your list price. Now the list price is the stated value for which something is offered for sale through a particular channel such as a showroom, a retail store, a catalog or a retail, wholesaler or distributor's website. The list price is also known as what? A manufacturer's suggested retail price, or we can say it MSRP, that is manufacturer's suggested retail price. It is also known as recommended retail price, that is RRP, or the suggested retail price, that is SRP, of any product that is available in the market. You must be aware of the MRP, or I can say the maximum retail price. So it is MRP, or the maximum retail price. Now the MRP is the maximum price at which a product can be sold. So we have nothing but list price equals to selling price plus your discount. Okay, so let's move forward and solve a question. Now this question states that a dealer allows a discount of 10% and still gains 10%. So what is going to be the cost price of the book which is listed at rupees 220? We will use the following method to solve such type of questions, and let me explain what the method is. Now the list price is nothing but list price is 220. Also the discount is what? 10% of the list price. So the discount, if I write discount as D, so it has to be 10%, that is 10 upon 100 of 220, that is nothing but 22. Thus we can write that selling price minus your list price, selling price is equals to your list price minus discount. Correct? So this is equals to 220 minus 22, that is 198. Now let the CP be equals to 100. So gain is going to be what? Gain is going to be 10% of the CP, which can also be written as what? 10 upon 100 into CP, that is 100. So gain is nothing but gain is rupee 10. Now I know that SP is nothing but SP is CP plus gain. SP is nothing but SP is CP plus gain. So CP is nothing but 100 plus 10, and this is going to be 110. If SP is rupees 110, then CP is rupees 100. When SP is rupees 198, then CP is going to be what? It's unitary method, that is 198 upon 110 into 100. If I'm going to solve this, then CP is going to be nothing, but CP is going to be 180. So the correct option is option number A, that is 180. Let's move on to another topic. Alright, so it is dishonest dealers and faulty weights. Have you ever met a dishonest dealer or a dishonest shopkeeper? So far we have seen many concepts in the section of profit and loss. All of the formula we use are for trading practices that are transparent and honest, but this is not always true. In the profit and loss section, our formula and rules will work only for those cases where the trade is fair and simple. However, you will also have to be ready for the false scale dealers, which we will see here. The profit or loss of the dealers will depend on the actual selling price. For example, Let's say that a dealer sells apple for rupees 100 per kg. For each sale he makes, the dealer removes an apple from the first stock. If the average cost of an apple is rupee 20, he should make an addition of rupee 20 on each sale that he makes. This will be in addition to his actual profit or the legal profit that he is making. So we need a mechanism or a set of formulae to correctly predict the gain percentage of the dishonest dealers. In the following section, we will see the concepts that are essential, and we will also state and practice the formula for calculating the gain percentage. The dishonest dealer is one who doesn't sell his product in the welfare of the customer. This type of dealer changes the weights or marks up the price too high so as to increase his margins. Another dishonest practice is that the dealer can list a very high price and then sell the item at a considerable discount. This is also a dishonest trading practice. Let's get a quantitative idea of this concept. Suppose G percentage represents the overall gain percent or the overall gain that a dishonest dealer makes through selling their product or item. And let X be the percentage loss or the percentage gain, whichever be the case. Therefore, we can write that 100 plus G upon 100 plus X equals to true value or upon false value. We can also have another formula. That is, suppose if a trader professes to sell his goods at cost price but uses false weights, then I would say that gain percentage, that is percent gain, equals to error upon true value minus error. This error has to be in here only. Minus error into 100. Now this is the formula that we shall use in solving the examples for this section. Let's see some solved examples that will help us get a better idea about the application of this particular formula. Now here's a question, and the question states, a dishonest dealer professes to sell his goods at a cost price but uses a weight of 960 grams instead of a kg weight. Find the gain of his dishonest person in percent. So here we will use the second formula that we have, and we know that gain percent, that is your percent gain, is nothing but error upon true value minus error into 100. Here the error is going to be the difference between the true value and the fabricated value. So the error is nothing but 1000 grams, that is 1 kg minus 960 grams, and this is going to be nothing but 40 grams. Thus substituting this in the formula for the dishonest dealer, we have what? We have 4 times 1 by 6%, that is 4.167%. Hence, the correct option is going to be option number A, that is 4.16%. So, I hope you people have understood a little bit about profit and loss. We will resume with the next part in the next lecture. Till then, you can go to EduRev and attempt the shown test to understand this chapter in depth. You can unlock all the logged videos, documents and tests of CAT with EduRev Infinity Plan and ace your exams at less than ₹80 per month. Thank you.